Hello traders, and thanks for tuning in to Exness's Market Outlook. I'm Michael Stark, Financial Content Leader at Exness, and in this video I'm going to be giving an idea for a possible trade over the next few days, some of the narratives that are driving the possible movement in the market, and what traders who were to take the position would need to be aware of. But before that, let's look back at the performance of last week's idea. Last week, the idea was a potential buy for copper from the area around 8,950, with a potential target above or possibly significantly above $9,000. The idea was fully accurate, with the price having moved up to around $9,400 in the days after publication of the video. So well done if you managed to make a profit on that, but please remember that performance in the past does not guarantee results in the future. Now, for this week's idea, it's a potential buy for natural gas. If we look at the chart of natural gas against the US dollar, we can see that the price is building inside a formation towards the bottom of the downtrend. And if this formation is broken, it's possible that the price might increase, and perhaps might increase significantly. We can see that with low ATR, that indicates the potential reversal of the trend and a possible move up. And some of the targets for the position might include the area around 207 to 210, which is the area of the 100 SMA. 230 is the area of the previous high from earlier in the year and last year. And also we have potentially further up 258, the area of the 200 simple moving average. Natural gas is a volatile instrument most of the time and is more challenging to trade, other things being equal, than most other commodities. But one of the primary narratives that drives the potential move up by natural gas is that it's generally lagged many of the gains that have been seen for other commodities, notably crude oil and gold and copper in recent days. If we look at the chart of the commitment of traders, we can see that the red line, which represents commercial traders, has reached a new high recently. So that usually indicates a buy signal in the medium to longer term, while we can see that the line indicating non-commercials, large speculators, has not increased significantly. We could also see from the fuller details about American inflation that inflation in the USA, particularly for commodities, has increased significantly in February. If we look at this chart, we could see quite a strong print of CPI related to energy commodities. That's something that could potentially drive natural gas to continue further up. Some of the main things that traders would need to be aware of this week is the overall performance of energy markets, yes, but also the critical single factor is American inflation, which is happening on Wednesday the 10th of April at 2:30 in the afternoon GMT. The consensus is for this to go up to 3.4%, but given that inflation is generally printed higher than the consensus for the last several months, it's quite possible that that could happen again. And please be aware that if you trade, especially natural gas, around important economic data, make sure to manage risk, make sure to set realistic expectations. So in summary, the potential idea for a trade this week is a buy for natural gas with a possible target around 210 to 230. One of the main narratives driving the potential move upward by natural gas is that gas has lagged the overall gains in commodity markets. And the critical release to be monitored in the next few days is American inflation, which is taking place on Wednesday the 10th of April. Thank you very much for joining Exness's Market Outlook. Please remember that this is just an idea for a trade. It's not a signal, it's not a guarantee of success, and always do your own research and manage risk.